Today we are talking one of the most critical topics for AML professionals, the top 10 AML red flags you should always look out for during your investigations. Miss one of these and it could mean missing a major risk, or even worse, a financial crime in progress. So grab your notepad and let's jump into today's video. AML red flags are your early warning systems. They are the clues that something might not be quite right, whether it's unusual transaction activities, suspicious customer behavior, or inconsistencies in the documentation that is provided by the customer. By knowing what to look for, you're not just ticking compliance boxes, but you are actively protecting your institution and the financial system at large. So let's break this down into the 10 AML red flags. As I go through these, think about your own investigations and how often you've seen this behavior. Round dollar transactions. If you notice transactions consistently rounded to even amounts, so say, for example, $5,000 or $10,000, this could indicate structuring or a deliberate attempt to avoid detection thresholds. So this type of transactions are often flagged by an AML transaction monitoring system, which can help you as the investigator to identify patterns more efficiently. Frequent high cash transactions. Customers depositing or withdrawing large amounts of cash frequently. Is that the case? Cash remains one of the most challenging medium to monitor due to its anonymity and difficulty also to trace. So frequent cash transactions might suggest involvement in money laundering or illicit activities, particularly when the amounts are inconsistent with the customer's profile or business operations. And remember that yes, AML systems often flag these activities, but it's the investigator's expertise that connects the different dots to spot the anomalies. The third one is rapid movement of funds. Look for accounts where money come in and leaves almost immediately to unrelated, perhaps offshore accounts. This could indicate layering in the laundering process. And imagine like a bucket with a hole at the bottom. As soon as funds are deposited, they drain away to different destinations, often without clear business purpose with those entities. So these rapid funds of movements are likely the signature of someone that is trying to obscure the money trail, a strong indicator of sophisticated laundering strategies. Number 4, we've got mismatched customer profiles. Are the customer's transactions inconsistent with their stated occupation or perhaps the business purpose that was declared during the onboarding phase? For example, imagine a retiree transferring millions overseas. That's a glaring inconsistency, right? Transactions like these often raise questions about the true source and the purpose of the funds. By digging deeper, investigators can uncover patterns that might initially go unnoticed, and helping to connect the dots and identify potential financial crimes. Number 5, I put unusual geographic locations. Transactions that perhaps are involving high-risk jurisdictions, exposed to sanctioned countries, or perhaps tax havens. Do you see any of these? If yes, that's a red flag to investigate further. As an investigator, you should review the nature of these transactions, the parties that are involved, and which are the connections with those type of jurisdictions. So look for patterns such as frequent transfer to the same high-risk area or activity inconsistent with the customer profile, and consider escalating the case if the risk cannot be then mitigated. Please give me 2 seconds here, and if you're finding this information useful, imagine the depth of insight that you would gain from my FinCrime Career Accelerator course. In the FAU module of the course, I'm covering the AML red flags, and investigative techniques, and so much more. So whether you are new to the financial crime prevention field or if you're looking already to advance with your career in this sector, this course has something for you. So check out the link in the description of this video if you want to learn more. Alright, let's keep going. Here are the remaining AML red flags that you need to know. Unexplained wealth. Customers who cannot explain their source of funds or whose income doesn't actually match their lifestyle could be engaging in money laundering. For example, an individual with a modest declared income but who frequently transfer substantial sums of money should trigger close scrutiny. Investigators should request additional documentation or explanation for the transactions and analyze the pattern that might reveal hidden sources of illicit wealth. I mean, who doesn't know where their money in their account is coming from, right? Number 7, overly complex corporate structure. Shell companies, nested ownership, or trusts with no clear purpose. Do you see any of these in your books? These structures often conceal beneficial ownership and serve as a tool for obfuscating the true source of funds. Shell companies, for instance, are frequently used to create layers of transactions that make tracing the origins of the money nearly impossible. Nested ownerships, where one entity owns another through a complex web of intermediaries, can hide the actual individuals that are benefiting from these transactions. And then trusts, particularly those established in jurisdiction with strict secrecy laws, can add another layer of complexity to the process. So investigators should scrutinize these structures for inconsistencies, demand detailed ownership records, and flag any refusal to provide this level of transparency as a serious red flag. Almost there. Number 8. Reluctance to provide information. Following from the prior red flag, in fact, isolating the non-cooperation of the client is a red flag on its own. A customer who's hesitating or outright refuse to share details about their business or source of funds is a significant indicator of potential risk. Investigators should document these instances thoroughly and consider escalating cases where transparency is persistently lacking from the customer. Number 9. Large volumes of wire transfer. Frequent international wire transfer, especially to unrelated parties, can indicate money laundering, fraud, or other financial crimes. However, it's important to know that the international wire transfer are particularly legitimate when they align with the customer profile and business purpose. Investigators should focus on identifying patterns or inconsistencies, such as unexplained connections to high-risk jurisdiction or on transfer that are lacking a clear business rationale. And the last one, number 10, activity near thresholds. Here we are looking for customers structuring transactions to stay just below the reporting limit, like $9,999 instead of $10,000. Those often signal intentional evasions. And lastly, your AML-TM system should be equipped to help you identify this type of activities, even across multiple transactions over a specific time frame. For instance, in my flag, customers consistently staying below monthly reporting limits with several structured transfers. However, with the volume of false positives in the AML transaction monitoring domain, it's essential to remain vigilant and use your investigative judgment to separate the noise from the genuine red flags. So there you have it, my top 10 AML red flags to watch for in investigations. Remember, each of these red flags is like a puzzle piece on its own. It may not mean much, but together they can tell a compelling story. And it's your job as an investigator to connect those pieces and uncover the truth. And if you're ready to take your AML skills to the next level, check out my FinCrime Career Accelerator course, which is linked right below. And if you found this video helpful, I would appreciate if you wanna give it a thumb up, and remember to subscribe to my channel so you don't miss any more new videos like this one. And until next time, keep learning, keep growing, and keep fighting financial crime.